Johnson & Johnson is an American multinational corporation founded in 1886 that develops medical devices, pharmaceuticals, and consumer packaged goods. The healthcare giant has been a component of the Dow Jones Industrial Average since 1997 and is one of the world's most valuable companies. In this video, I'm going to explain why J&J is one of the best dividend-paying stocks and should be a staple in your long-term dividend stock portfolio. My name is Zach, and you should leave a like and subscribe to the channel if you enjoy the video. You should never invest in a business you don't understand. So in this video, I'm going to provide a full picture look at the business and stock history of Johnson & Johnson. All the way back in 1886, Johnson & Johnson was founded by Robert Wood Johnson and his two younger brothers. Initially, they manufactured sterile surgical supplies, household products, and medical guides. The company innovated in their field, making countless products and helping spread modern medicine throughout the world. By 1894, they had more than 400 employees and 14 buildings. That same year, they launched Johnson's Baby Powder, which is their first product in a category that would grow to become a significant part of their business. Additionally, they sold the first maternity kits, which revolutionized the safety of childbirth. At that time, most babies were born at home without the help of a doctor. The kits provided supplies and easy-to-follow instructions that dramatically improved childbirth safety for both the mother and the baby. Over the next few decades, their products would help save millions of lives. They provided first aid kits and surgical dressings in the Spanish-American War, World War I, and World War II. Additionally, during the 1918 influenza outbreak, J&J invented and distributed the epidemic mask, which helped prevent the spread of the flu. In 1944, the company decided to go public, and its stock was sold on the New York Stock Exchange. At this time, Robert Wood Johnson II wrote the company's credo, which would act as their guiding philosophy. It read, "We believe that our first responsibility is to the doctors, nurses, hospitals, mothers, and all others who use our products. Our products must always be of the highest quality. We must constantly strive to reduce the cost of these products. Our orders must be promptly and accurately filled. Our dealers must make a fair profit." The credo has since been modernized, but the core principles remained as the company expanded into the juggernaut it is today. The history of Johnson & Johnson is downright impressive. The positive impact of their products and innovations are immeasurable. Honestly, I don't think I can say anything to do it justice. If you want to do a deep dive into the history of the company, then I suggest you check out this interactive timeline they have on their website. It takes you through the entire history of the company, and it's actually very interesting. The link to this page is in the description of the video. So what does Johnson & Johnson's business look like today? The company is organized into three business segments: consumer, pharmaceutical, and medical devices. The consumer segment includes a broad range of products focused on baby care, skin and hair care, wound care, topicals, oral health care, women's health, consumer health care, over-the-counter medicines, and nutritionals. These include some of the most popular health and beauty brands in the world. For example, in skin health, J&J owns Neutrogena, Aveeno, Dr. Ciabo, Neostrata, Dabao, Clear & Clear, Rogaine, and much more. In self-healthcare, J&J owns Tylenol, Motrin, Zytrek, Benadryl, Zarbee's, Nicorette, and Sudafed. In essential health, J&J owns Listerine, Band-Aid, Johnson's Baby Products, OGX, Maui Moisture, and many other brands you'd recognize. According to the 2020 Q3 earnings report, the consumer segment represents 16.7% of the company's total sales. In this quarter, consumer sales increased 1.3%. However, this segment has an economic moat around it, giving it staying power long term. These brands individually have built strong recognition and loyalty, which will allow them to control a significant portion of respective market share. For example, the Band-Aid brand was created in 1921 with the introduction of adhesive bandages aimed at covering small wounds and preventing infection. At this time, no similar product had existed, and people typically used rags and household coverings. This brand became so synonymous with the product that most people just call all bandages Band-Aids. This brand recognition has allowed them to control a significant market share in the bandage space. Another great example is Johnson's Baby Products, which have built significant brand loyalty and trust over many decades. As of 2018, they control 37% of the market share, which provided them $1.5 billion in sales. The pharmaceutical segment is the largest part of the company. According to the 2020 Q3 earnings report, this area represents 54.1% of total sales. The pharmaceutical segment is focused on 6 therapeutic areas: immunology, infectious diseases, neuroscience, oncology, cardiovascular and metabolism, and pulmonary hypertension. Medicines in this segment are distributed directly to retailers, wholesalers, hospitals, and healthcare professionals for prescription use. Some of the key products in this segment are Remicade, Simponi, Simponi Aria, Solera, Tremfya, Endurant, Prazita, and a bunch of other drugs that are difficult to pronounce.
Mobilize true and international effort to pressure. Mobilize true and international effort to pressure.
In this segment, some products can build up significant brand recognition, but the main competitive advantage here is patents. Many of these products are patented, thus they have a 20-year window of limited to no competition. After the patent expires, then competitors can start selling generic versions. However, patent expiration isn't the end of that product, as they have built a brand, customer base, and operate at a scale to keep price competitive. Additionally, J&J is continually innovating to introduce new drugs. This allows them to keep growing even when competition comes in. In Q3 2020, J&J increased sales in the pharmaceutical segment by 5%, which is quite good. The medical devices segment is the second largest part of the company. According to the 2020 Q3 earnings report, this area represents 29.2% of total sales. This includes a broad range of products used in orthopedic, surgery, interventional solutions, and eye health fields. These products are distributed to wholesalers, hospitals, and retailers, and used principally in the professional fields by physicians, nurses, hospitals, eye care professionals, and clinics. They include orthopedic products, general surgery, biosurgical, endomechanical and energy products, electrophysiology products to treat cardiovascular disease, and vision products such as disposable contact lenses and products related to cataract and laser refractive surgery. This segment also has competitive advantages as many of their technologies will be patented. Most of their products are not directly consumer-facing and more business-to-business, so the power of the brand operates differently. In this case, it's more the trust behind the backing of Johnson & Johnson as a company. They have a high reputation of efficacy, so products owned and developed by Johnson & Johnson likely carry a high level of trust. In Q3 2020, this segment decreased in sales by 3.6% due to short-term problems, but in the long term, it has seen consistent growth. Alright, so that's J&J's business, but how are they planning on growing the company? The cornerstone of their growth strategy is investing in innovation. This is done through internal R&D, but in large part through acquisitions of smaller companies. Acquisition is ideal as much of the development risk is taken on by the smaller company, and J&J can swoop in once the product is proven out. This is actually a win-win for both parties, as Johnson & Johnson can provide distribution and scale that allows them to get the product to market much easier. Additionally, an aging and growing global population means that more and more people will have medical needs over time. All of these will likely lead to stable growth for J&J. So now that we understand the business model of Johnson & Johnson, it's time to look at the stock as a dividend investor. J&J has seen consistent and predictable revenue growth. Over the last 10 years, the revenue has increased from $61.5 billion to $82 billion, which gives a 2.9% compound annual growth rate. This is consistent with gross profit increases, as over the last 10 years, the profit has increased from $42.7 billion to $54.5 billion. This makes the 10-year compound annual growth rate of gross profit to be 2.47%. They've been steadily growing for decades, and I expect this to continue moving forward. The Johnson & Johnson dividend has 58 years of dividend growth, putting it in an elite class of dividend kings. The dividend has a 10-year compound annual growth rate of 6.87% and a current annual payout of $4.04. The payout ratio has hovered between 43 and 53% over the last 5 years, which means the dividend is very safe and still has room to grow over time. At the making of this video, J&J stock is priced at $147.14, which gives it a 2.75% dividend yield. Over the last 5 years, anytime you can buy J&J over a 3% yield seems to be a good buying opportunity in terms of optimizing yield on cost. Johnson & Johnson is a global company with about half their revenue in the United States and the rest international. It's not only diversified by country, but by income streams, as discussed earlier. Of course, one of the most important parts of a business is its leadership. The CEO of Johnson & Johnson is Alex Gorsky. He's a military veteran who graduated from West Point and received an MBA from the Wharton School of the University of Pennsylvania. Gorsky has been with Johnson & Johnson since 1988 and worked through various parts of the company, eventually becoming CEO in 2012. I've listened to multiple interviews with Gorsky and came away impressed with his long-term thinking for the company. Also, I have to mention that the Johnson & Johnson vaccine candidate for the virus which shall not be named should be approved by the FDA in early 2021 and possibly by the end of 2020. J&J is one of my holdings in my long-term dividend stock portfolio, and I plan on it being my largest healthcare stock. Currently, I have 7.013 shares of J&J with a dividend yield of 2.984% and a cost per share of $135.66. So in total, I have $949.63 invested in the company. Personally, I'll be buying more when the share price is around or below my cost per share. However, don't take my advice blindly and be sure to do your own research before making any investment decisions. Thank you for watching Dividend Data. I'd greatly appreciate it if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel on Patreon and be a part of making these videos happen. The link is in the description. Please leave a comment below and thank you for watching.